So let's put in focus what is really happening with Reliance Industries. Well, to begin with, of course, as I told you, the Reliance Industries had announced its results after markets has closed on Friday, and there was a 78% rise in net profit announced by Reliance. That was at about 26,994 crore rupees. These gains were mostly led by the sale of RIL's investments in Asian Paints. Now, gross revenue for Reliance Industries was also up 6% on a year-on-year basis to as much as 2,73,252 crore rupees. Now, leading Reliance and the results of growth that we're seeing in Reliance have come from both Reliance Jio, whose net profit has grown 25% year-on-year, as well as Reliance retail profits that are up after tax at about 28.3%. Reliance Industries, which is now down about 2.5% or so in trade already, given, of course, the fact that there is threat on the company's earnings as far as its exports to EU are concerned. Meanwhile, Reliance Industries shares, which were supposed to consolidate and supposed to go in a higher territory as per analyst expectations as of last week after announcement of its results, are now seeming under pressure. Any word for investors who are looking at Reliance Industries? What kind of a target should they now be setting for themselves, Kranthi, given the fact that we don't know how successfully India will be able to evade these fresh sanctions which are being imposed by EU?
Kartik, on a longer term perspective, the OTC business, oil to chemical business is concerned, the dependence upon, of course, it is the key major driver for Reliance Industries. The GRM's, gross refining margins, are extremely crucial. But if we evaluate Reliance Industries as a sum of the parts business is concerned, still there is a lot of immense value. Of course, this is the company with the highest market capitalization in India, and the sum of the parts business, the new age businesses like the gigafactories, the green energy, and the Geo. We tend to say Geo is the telecom companies, but the management always pursues Geo as the technology company, and the retail business is concerned. All these, the new cylinders of the business, they have been doing extremely good, and the gigafactories are going to deliver the results and the key revenues in the next coming quarters. So given the kind of the setup is concerned, Reliance Industries is best positioned to take the disposable incomes, growing disposable incomes in India. And also the alternative energies, that's also going to play a key role for Reliance Industries. So any dip for a longer term investor, definitely it is a warranted buy for a longer term.